Well, thank you, Tim. If I could welcome the panel onto the stage. As I say, there are a large number of us. Here we are. Take a seat anywhere. Great. Well, welcome to the panel. Before we kick off, maybe ask everyone to introduce themselves briefly, and then we'll dive into the topic. As Tim mentioned, please do ask any questions on Slido. We've got plenty to get through, so we'll fire away. Maybe Henry, if you want to go first.
Good morning. Henry Sallitt. I'm the managing partner of Kpedekpo. We are a UK-focused growth investor, so typically investing in companies with sort of post-profitability, maybe 10 or 15 million of revenues through to maybe 100 or so, typically with 75 or 100 people at the start and maybe, well, some multiples of that afterwards. So dealing with lots of different scaling up issues as we go.
Great. Thank you.
Good. I'm David Mott from Oxford Capital. We're a tech venture capital firm. We also invest in some other strategies in energy and media and real estate. On the tech side, we're early stage investors. We look to try and back the best of British businesses and then back them all throughout their whole life cycle. So we will also invest at the very latest stages.
I'm Shirin Dehghan. I'm a partner with Frog Capital. We come in at B series, so exactly at the point where companies are basically trying to scale up. And I've been a VC a whole 3.5 months. So prior to that, in fact, we worked together on my startup, and I was backed by Oxford Capital and a number of other VCs, and had a very successful exit in 2013. So entrepreneurial background. Hopefully
Great.
Some new angles to
Seen this from both ends of the spectrum.
Yeah, exactly.
And Malcolm, it's very good to have a panel with two Malcolms on it.
Yeah. Good morning, everyone. Malcolm Pedicle, founding partner of Panoramic Growth Equity. We manage two funds that can invest up to 5 million in UK SMEs. Generally, businesses doing between 1 and 15 million when we invest in them.
And my name is Oksana. I'm part of True, and we are a retail and consumer investor. And we have a private equity fund which invests in more mature companies, and also a venture capital fund where we invest up to 500,000 in a company. So we are sort of at the very early start of the journey of companies, and then hopeful that they get to Series B and Series A.
We can pass them on to the likes.
Yeah, exactly. And then we pass them on.
Great, thank you. And I'm Malcolm MacDougall. I'm head of private equity at Charles Russell Speechlys, a law firm headquartered in London, offices across Europe, Middle East and Asia. And we specialise in private capital, and by that we mean private equity and private wealth. So let's just dive into the topic. So scale-ups, we've been given a pretty free rein as to what to talk about, and obviously a lot of things have been discussed already in previous talks and discussions. But maybe let's kick off with what you guys, in terms of the funders, see as key challenges for companies looking to execute a scale-up. We've heard a lot of talk about getting the right people and culture, etc. But there's obviously a myriad of issues that these companies face. Maybe kick off with you, Oksana.
Well, given that we are a very early stage investor, I think for us it's the whole market fit journey at the time before they sort of move on to later stage funding is still quite important, and I think it requires quite a lot of flexibility on a founder's side, because they might have a very ambitious vision, but sort of getting into a detail of who will be buyers of the product, which sounds kind of like that's not exactly a scale-up problem, because a lot of people talked about funding and hiring right people, but actual product and market fit itself is still extremely important, because that will determine your whole sales journey and your ability to execute well. And before sort of bigger funding round, getting that right is extremely important.
So products, obviously key. Malcolm, what's
our business is usually, let's say 5 million turnover when we're going in trying to grow to 20, 30, 50 million turnover. And you go through a whole heap of scale-up challenges with, recruitment, retention, incentivization, internationalization. But I suppose on a personal front, it's often the role of the founder. So going from that central hub of everything, when they've got to 2 or 5 million turnover, to working out where they fit, getting the right people around them, and actually having the courage to make that transition from being everything to being the CEO or the chief sales guy or the CTO, and that's often quite a big challenge for the founders going through that process.
And how do you sort of help them with that? Or,
It's one of the roles that we play as a sort of a mentor, or give them a prod in the right direction, or help them introduce them to other people who've been through that, and just really guide them through some of the uncertainties that often come, and the insecurities that come with giving up a bit of your baby, to allow it to scale, because it often can't scale with that individual taking on all those roles.
Excellent. So a helping hand for the founder. Shirin,
Yeah. So I would say strategy is really critical for scaling up. So to really focus and look at how fast you should scale up. Is the market ready for you to go? And sometimes, entrepreneurs can get ahead of themselves, get very optimistic and burn a lot of cash, and actually not achieve what they want to achieve. So I definitely advocate entrepreneurs, founders, exec team, to knuckle down and really try to figure out the market, not from top down, or this market, or this Gartner says is 20 billion, none of that, but actually figure out what customers they're going to go after, why they're going after them, what's the sales cycle going to be like, and really build a bottom-up plan to see how realistic this scale-up plan really is, and what the right strategy is in terms of both internationalization as well as expansion of your customers and products.
So having the right strategy, absolutely
it's critical,
key.
yeah.
David?
I'll just build on that point. I think when you're at an early stage in the business, it's all about trying to sort of test the market, test the marketing, see what's working. I'm a great believer in using data to work out, to inform your strategy, and to inform the point in time at which you make those tough choices. So strategy, yes, is really important, but ultimately, when you get to a point of scaling up, you're going to face choices of, do we deepen our presence in the local market and increase our margins, or do we push out internationally? Do we increase the product range? Do we concentrate on what we know is working? And I think the data can really inform the timing of those strategic decisions.
Yeah, so data being incredibly useful for working out whether your strategy is the right one.
I think, I'm sure pretty much 98% of the companies in this room will be data-driven, digital-first businesses. Yeah. And that, I think it exists today. That's a sort of key building block for you.
Sure. And Henry, I know you were on the roundtable about culture earlier. Do you see that as a key challenge?
Look, I think culture is incredibly important, but I think for us, execution is more important than strategy. So maybe not more important, but something that we're very much more focused on. The businesses are a little bit later stage in their development. They're generally profitable by the time we invest. We think a lot about people and process and systems. So we're trying to sort of dumb down and scale. So inevitably, when we invest, the business has been built relying on a small number of very brilliant people who've driven through energy and equity and enthusiasm and excitement. It's that sort of first 50 people phase where everybody's living the dream. And then the businesses become a bit more real. And you can't rely on hiring A+ people all the time. You've got to get some B+ people and some B people in. And that involves putting in process and systems. And we do a lot of that, and we work very closely with our companies doing that from a sort of process point of view. But also, just to go back to the culture, I think you can't get the process and the systems right without the right people. And I've been doing this quite a long time. When we started off, people was very much a sort of gut judgment. I think people thought good private equity people could judge people well. And I think the data there now is that structured interviews are better than unstructured interviews. That when you hire people, you want to understand the team of people that you're bringing them into. So we do a lot of work assessing the teams that we've got there at the moment, understanding the characteristics of the people, understanding what type of people will fit into those teams, and helping the management work through those issues.
And I suppose it becomes a different prospect as you go through a scale-up. The people you started with, you might need to bolster them, add new people as you go. It becomes a much
I
bigger
think
company.
that the fundamental characteristic we're looking for is people who have the confidence to be able to deal with change, to bring in people to sit alongside them who have far greater experience and domain knowledge in a particular area of the business than the guy that's or lady that's running the business. And that requires a particular type of person.
And you mentioned systems, and David, in the sort of pre-chat we had on this, it was a point you really wanted to make about companies. Obviously, at the start, cash is tight, and you're a bit sort of, and then you need to actually start with a system that you can then live with throughout a scale-up, as opposed to.
I was just thinking of the example Frederick gave earlier about the Instagram star, 110 million followers, who's launched a beauty products business, hundreds of millions of dollars of turnover in 2 years. And just imagine the sort of logistical fulfillment challenges, the CRM challenges, all of that side. So I think today, when you're starting a business, you really need to start it with the end goal in mind, with the systems on day one that are going to enable you to become a 100+ million business in the future. Because introducing new systems and scaling things up, re-engineering the business is such a massive management distraction and can be very complicated if you do it kind of midway through the journey. So, use tools like Salesforce and tools like that can just enable you to scale with that system on day one.
So, the cash is worth it at the start. It might be.
Yeah, it might be a little bit more expensive per seat. Maybe you're paying £50 a head instead of a competing system at £10 a head per month. But it's probably worth it. And when you're only 8 people, it's not very much money. When you're 100 people, then it starts becoming a massive saving.
And I suppose it comes on to the next question: having the cash. Obviously, you guys are the providers of the cash. Shirin, in terms of what private equity or growth capital investors can bring to the table, there's obviously the cash funding, but is that the main thing, or is there, what else are you guys bringing to the table to help these companies?
Yeah, I think obviously cash is important, but just to bring, experience, a different point of view. So I've been on the other side, done it, founded a company, scratch, grew it, sold it. So hopefully that would also bring a level of experience to the boardroom, for example. But I'm just an individual. I think there is a commonality around scale-up that can be, discussed and nurtured. So at Frog Capital, we're very passionate about what we call scale-up methodology, where we've identified very specific areas where companies need to focus on and to build their knowledge, expertise, whether it's talent, hiring the right people. So what does a good CFO look like? What does a good CTO look like? For example, things like customer acquisition, how do you go about setting incentives and quotas for your sales? And just simple examples, because a lot of founders, CEOs, just as I was, the first time, right? And they don't really know what they don't know, and it's just important to kind of open their eyes to some of these things. And I think as investors, especially the ones who've had operational background, we can really bring that to bear.
Sure, and so that's obviously clearly a way that PE and growth capital can help. In terms of the funding, Malcolm, obviously how much funding the company needs and when is going to be critical, because you could put too much money in at the start or not enough and then have to go back, and what's your view on that subject?
Yeah, it's always a massive challenge, in terms of how much money and when you take it. I think our analysis of it is everything takes longer and costs more. So you've got to give yourself the headroom, and as you're going through the journey, you're likely to have to raise more money. So it's almost to break it down into bite-sized chunks. So raise a little bit more than you need to start with, set some pretty concrete goals in terms of what you're trying to do. So Captify is one of our businesses. We invested in them 2013, and that initial money was to set up a tech hub in Kiev and launch the first overseas office. We were able to do that, prove the product, and prove that we could do internationally. We then did a bigger round, which we invested in Smedley came along and invested in, and that was to really grow the team and roll out the international plan. And it was a lot easier to do that, having actually got the proof points before. So we always work on that sort of methodology.
Right.
Always raise a little bit more
Than you need.
because it's always going to take longer.
And you mentioned international expansion there. Oksana, get your views on this. Obviously, there are lots of different elements to that, and obviously the people point is completely key. Someone mentioned earlier about having to hire people in the US and what have you. But those challenges that come with internationalization, managing a bigger footprint, making sure that the US subsidiary hasn't gone rogue or something. What do you see as key challenges there?
Well, we have most of our businesses are still UK based, but one of them, Lovecrafts, which was part of True Portfolio, that is now with actually Scottish Equity Partners. They have. They started a US expansion quite early, but I think you need to do it for right reasons, not just because it's the thing to do and it gives you a value uplift. You should really think, is that the right market to go after, how you're going to go after it. Also, US is challenging because it tends to be very competitive, and also good salespeople in US are very, very expensive and not so easy to come by. So you really need, if you're going after a big market like US, you have to have a very well thought through strategy and plan. And European expansion is a challenge in itself because, as probably a lot of you know, there is particular peculiarities within Europe. You have Germany that is very cash driven, so your whole online selling strategy needs to accommodate that. So I think it's important to do it for right reasons, and also getting your home market right is probably a more cautious but maybe not as exciting story, but that will give you a chance to sort of scale up in a more measured way, which I think is better. So,
yeah, Henry.
Yeah, I was going to say, I mean, international is a big focus for us. So if you look at our portfolio at the point of investment, non-UK income is about 20%. If you look at the portfolio today, it's somewhere between 55 and 60%. So it's something that we think about a lot. And in terms of kind of what we can bring to the table in terms of helping with that, I think it's about having lived through a lot of experiences. So I don't think there's necessarily a right way to go to the US or go to continental Europe, but there are definitely a few wrong ways of doing it. We've found the US definitely is most easily done on the back of a small acquisition. So we've had great success of buying kind of platform businesses there with some infrastructure in the US. Conversely, if you start from scratch, it's absolutely essential that somebody very senior goes there and runs the team. But it's something we're very, very, very heavily focused on.
So is that something you think, because it goes to culture, goes to all these issues about sending, if you're going to start in a new country, someone from the mothership being out
definitely.
there?
Definitely, and I think communications as well. I mean, comms is really important. As soon as even if you've got two offices here in the UK, you've suddenly got the issue of whether those two things are developing in harmony or whether they're heading off in different directions. And if you've got somebody who is, ideally a part of the founding team, but definitely part of the senior management team who can represent head office, for want of a better word, in those satellite offices, I think is definitely makes things very much smoother.
And just building on that, one of the wonderful things about being a venture capitalist is we love partnering with people. We partner with founders, but during a scale-up phase, we love partnering with other VCs. And I'm a huge believer in building up your investor base to sort of preempt the growth of the business of tomorrow. And that can often mean bringing on investors bring in US investors if you're going to go into the US market, or Asian investors if you're going to go into the Asian market. And really partnering with those investors is a great way of helping avoid those sort of simple mistakes that that you'll naively make inevitably without them.
And I suppose on this internationalisation question, obligatory Brexit question, maybe Shirin, do you see post-Brexit that scale-ups people will focus on other jurisdictions than maybe they have in the past, or do you see this affecting how companies expand?
Really, from a company perspective, it doesn't affect it. Obviously, the value of pound, does impact things. In fact, for the better if you're based in the UK, but maybe not so if you've got a big team outside of UK. But other than that, I haven't personally seen an impact on business, because we invest in software businesses, so that effectively we haven't seen that. However, where we've seen impact is really on hiring in the UK. So I'm also chairwoman of OpenSignal, which is a fast-growing UK-based company, and they've had Eastern Europeans who work for them as software engineers, designers, etc. And some of them are going back or going to other countries in Europe, and that's a reality on the ground, which is the real impact of Brexit, I think. Yeah.
And I remember when we spoke about this again pre-panel, that was having the slightly bizarre effect of sometimes meaning that you actually then set up in a country where you might not.
Absolutely.
Have been
in order to keep them, we said fine. Work remotely. So the guy who was Italian went back to Italy. We said, carry on working from home. There was a Polish lady, brilliant designer, wanted to live in France, fine, work from France. So try to effectively keep them. We didn't mean to have an employee in France or Italy, but that's the way it happened. Just to keep these really good people. I mean, we talked about talent. Scale up is all, and this is exactly where OpenSignal is, and some of the companies that Frog Capital has invested in. And we need talent, we need people, regardless of their nationality. We just need them to be able to hire them. And Brexit is really, I think, impacting that. Yeah.
So Brexit might have the bizarre outcome of actually meaning more European subsidiaries,
Yeah.
less.
Okay.
And Malcolm, your views on internationalisation? Any particular things you want to?
Yeah, a large part of our businesses go international. I completely agree with Henry in terms of the successes we've seen have been when founders or the founding team have gone out, and when they haven't, it's generally taken much longer, and it's been a lot more painful, and it's cost a lot more money, and maybe hasn't worked out as we would have liked. So for us, that's fundamental, not to every location, but if you're going to go to an import like the US, it makes a massive difference. I think just on your Brexit question, and people, I completely agree in terms of we're seeing it with techies, but we're also seeing it with non-techie jobs. We've got a sausage business that is a massive massive Eastern European workforce, UK's largest premium sausage business, and their workforce are going home, and we can't get Brits to do those jobs, and that's a completely different end of the scale, but equally as painful.
So Brexit's even affecting sausages.
It certainly is.
Right. And actually, you touch on this sometimes when things haven't gone completely right in a scale up. It'd be useful to just obviously no names or anything, but some war stories where you've seen one of these things not go the right way. Maybe Oksana, I don't know. Put you on the spot there. Sorry.
We don't like to talk about failures.
They're all successes.
They're all successes. Well, I think it's...
Maybe something happened to a friend.
Yeah, sure. A fellow VC. No, I think the failures come when it's mainly, I think, due to the founders and the resilience and ability to be flexible. I think a couple of our failures came because the founders just didn't manage the transition from sort of being 2 to 3 people team to 10, 15, and then from 10, 15 to 100. I think some just find it very, very painful. They don't want to let go. They don't want to have a heavy hitter in the team because, so I think that's when most things go wrong. It's really when the transition for founders sometimes is very, very painful. And some founders do grow into the role and sort of find their niche, and some just not able to do it.
So having that flexibility in a founder is absolutely key.
Yeah.
Malcolm, any more stories?
I think probably tying it to internationalization. It's making the decision to cull it when it isn't working, which is often an interesting one when it's international, because you can get lots of words about it's coming and it's a bit remote and we're only a couple of months away, and it always seems to be a couple of months away. So actually, our ones that haven't gone so well, where we've spent more money than we would have liked, have been when we haven't been brutal enough in terms of culling those ones.
Right.
But I also agree in terms of founders. I think the clarity of a founder as to what they're really great at, and allowing them to focus on that and building around them, I think, where the founder isn't comfortable enough to actually say, well, I'm not very good at that, I need somebody better to do that part of the role, is also where we've seen issues in the past.
Sure. And Shirin, you've seen this from both ends, and obviously had a great backer.
It was a good journey.
So, any war stories that a friend of yours might have?
Actually, I'm very happy to talk about the war story in my own startup. So
That's pre-David.
No, that was pre-David. Actually, it was. No, it was just, that is actually true. He came in just at the right time. No, but I spent 10 years on my startup, from sort of founding it to exiting it, and I can split it into two journeys. In fact, two startups, and the first one went wrong. So I did have a first product that we brought to the market, and I saw the market exactly right. However, I personally didn't have the experience to bring it to market, and I didn't have the right people around me to tell me how to do it either. And that ended up going very wrong. Grew the business to a couple of million, but fundamentally I realized that there was no way that the business was going to get the kinds of return that my original investors were looking for, and neither was I looking for. So essentially I had to come up with a second product, and thankfully I did, and had to change out a team. I even demoted my own husband from a CTO position. And so, so coming back to what you were saying about the founder CEO making the hard choices, and sometimes you have to do that. And I came to that realization that I had to do, I had to change out my team for the second sort of journey, and didn't repeat the same mistakes I made. And sometimes you learn far more from your mistakes than you do from your successes. So the second one went brilliantly. We went from 20 million to 40 million revenue in 4 years.
Wow.
So it came in at the right time.
That's interesting, actually, both of you saying, on a scale-up journey, it's important to know when to change direction or when something isn't working, as much as anything else. Obviously, Shirin's business was brilliant, but any other?
Thank you for the comments, but I would. I think I'd just add a sort of comment that one of the challenges for scale-ups is when you get to that point where you can see things really happening. You need to have the right war chest, and especially in the market today, we're seeing more and more European rounds sort of match the size of US rounds, but Series A rounds of 20, 30, 40 million pounds are almost the norm today, whereas they used to be 4 or 5 million pounds 10 years ago. So, I think as a management team and as a VC, you can be much more confident about going into attack a new market where there may be existing competitors in place, and try and become that category winner. And you can do it if you've got that war chest, or you've got a better chance at least if you've got that big war chest. So while the capital is available, raise it.
Any companies in the audience there? And David's got his checkbook open. And Henry, obviously no war stories.
No war stories, obviously. But I would say our biggest challenge, the thing that we've got better at best, I think, is getting a quick start. So I think You've got a limited, we're typically invested for 3 or 4 years, so you've got to get on with stuff quickly. And making sure that 100-day plan is a real plan. It's not just sorting out a whole lot of things that came out as a result of the deal. That you know who you're going to hire, when, and what you're going to do, and get on with that fast at the beginning to make a difference. I think if I look back over my period doing this, I think I would have a lot of regrets about not doing enough in the first year of the investment, just kind of drifting on in the direction that the business was going on. You really need to sort of use that as a catalyst and create change.
So speed of the essence.
Yeah.
Well, I haven't had any questions on the Slido thing. I assume I'm operating it correctly. But if anyone does have any questions in the audience. No? Great. Well, leaves me to thank the panel. Thank you very much indeed. And good luck with all those scale-ups. Brilliant.